A very good Tuesday to everybody. Welcome to another day in your journey to becoming a profound, independent, self-made trader. So as you guys have remembered, on Sunday we did have a Zoom 2 days ago, and that Zoom took us at least 4 hours plus. So what did we talk about to those who missed? So firstly, we covered a lot on the psychology aspect of a trader and how to layer efficiently, and I managed to show the difference between, for example, to summarize it up, we all have realized within the Zoom there are two types of trader, A and B. Same account size at 200, but slight errors in layerings over here will result to, if they full margin at the final zone, they will maximum only get 70 USD. But with the A style of trading, which is my style of trading, and some of you guys have managed to become that style of trading, when we full margin on our final zone, we will get around 700 USD. So same account size, but very different result, simply due to the fact of emotion, and this results into an unnecessary excessive layering that is not precise. Meaning to say, you were only layering due to the fact that you think it's a good idea to layer, but you don't really know why should you layer. So after we have covered that and everyone's mind has been awoken, we then went into goal to talk about what is happening currently over here. So I went through to put into a perspective of a daily perspective time frame only, to talk about an incident within the zone that we are in. First, we have to understand we are currently playing in the past 1 to 2 weeks in the zone of 1920 up till 1953. So this is our weekly sideways zone. But now this is not any mere zone. That's why you see we got the sell insane, we got the buy insane. And the reason is due to the fact that this zone is a zone that have the classical conventional understanding of a resistance turning into a support. But that is not what is fun about the zone. So the zone that we are in, we are actually focusing due to the fact of this candlestick structure formation. So by being able to identify the existence of this guy over here, you are able to then later understand the sequence of the future. So the engulfing buy that was formed within this location is prominent and dominant for us to talk about and focus on. This particular engulfing buy, but now we have reduced the size into the zone of the previous resistance, have managed to put gold on an incline or bullish trend for the past 2 to 3 months, even up to 4 months. And this is happening all due to this price level. Hence, meaning to say, the behavior of the traders over here are somewhat long-term directional movements. So meaning to say, after the breakout has happened, it took 3 months to go from left to right, and then now it entered again. So this is the actual first retest of the zone. The wicks is not counted. This is the actual moment that the body is testing the zone. So when it tested the zone, it formed another engulfing buy, locking the current period bias within this zone to be approximately 1940 up till 1949. But if we take it to the extent of the whole zone, it's up till 1954. So when you are in this kind of sideway, what can potentially happen? So let's say if we want to talk about the buy, why can it potentially buy? We knew that the breakout has happened over here, so a previous demand zone has been broken, and hence potentially when there is no more buyers, there will be sellers. But the issue was, during the breakout, it has only done its first engulfing sell, giving its first confirmation of potential sellers living in here, locking the price as a seller's price. But usually as well, gold can like to do our ABC. So another daily candle could come up here to form an engulfing cell that confirms the breakout and giving the power it needs to push below the buyers that have maintained the price for 3 months. So now, that's when I said, if this zone breaks, it will always test the lowest part, 1929. So that's when during the first time it entered, when the sellers kicked in, it tested all the way because we don't know exactly where the buyers are within the zone. So for this case, it took all the way below. So when it took the most extreme buyers from below, it will test the most extreme buyers from above, correct? So where is it? Number 1, it's going to be 1972.65, the beginning of the breakout zone, the point of beginning. Number 2, potentially this level, 1965, 1966. Why? Because this is a triple crossover EMA level that can potentially act as a medium term resistance. So this is where you are in a sideway. Hence, don't panic like a baboon. Because when we bought at 1965 even, we didn't layer hardcore. I took only 2 layers. And everyone else bought over here, here. So this is where you have to understand the game. The game is to survive as long as you can. So now, what is going to happen today is it will potentially decide to test again within this box area. But that's the part I don't like. If the daily candle starts turning red and crosses 1940, a potential short-term burst can happen to test below. So this is where we use the wicks theory. The wicks theory states that when a wick is tested, it will always test beyond the wick. So if we were to take this as a level, 1925, 1924, the next test will be below here. So usually a powerful sell stop can be placed here. But don't do that when you are not a professional trader yet. So when the burst happens, where will it go? Simple basics. Next engulfing buy zone. So today or tomorrow will be very important to see, is gold going to attempt on the lower potential, or will it use this sideways 3 months zone to give a spike to collect liquidity from a place that it should? Because before this, it already collected from 1972.65. This is where we got the sell accurately. But maybe another retest can happen around this area. But if that doesn't happen, and if you sell for as long as H4 stays below 1965, 1966, then you can potentially target it to go lower now. Why? Because the wick has been formed. Before this, there was no wick, so that was not possible. So this is where we have to wait for US session, but at least now our mind understands. We are in a perfect sideway, and the storyline is about the daily candle. So yes, we can find entries and whatnot in the M15 and H1, but for this current structure, the daily candlestick storyline is the most important for gold. So when you want to trade every day, visualize the ending of this candle first. Do you think today will be this or that? When you ask me, I actually don't know. Because this is what I know as a very powerful long-term decision-making zone. So of course I can be wrong, but in the end, relax. So as you guys know, I don't have my account in this iPad, but I have an entry 1964, 1965, I think 1964, 1962, something like that, 0.4, 0.4. So now I'm floating around 100 pips, so around $800 of a $13,000 account. So we'll see how it goes later on. But for you guys know now, this is the decision making. So when we have understood that daily factor, let's talk about prominent M15 levels of the day. Number 1 is going to be this level, the first breakout point of the A, waiting for a potential B to be formed. So this is a good scalping zone for a sell. Maybe if it works, it can go beyond. But if this breaks above, you guys know, don't be the idiots, wait here. Why? Because these are all wicks that has been tested, and hence if it wants to test, it will test above the wicks. So you can try smaller layers here, but you know that your full bullet must be waiting in here. So no matter even if you are wrong short term on the sell here, it can be powerful here. If you are buying here, you don't add more buys until where? At the very least, the M15 level of the day, which is potentially around 194. 1944, 1946. It's tested and cleared out. So that means another one would be somewhere around here. So this is for your 30-40 pips kind of place. But the big play, I'm not adding any more layers yet. I'm just chilling and waiting for the next big move. Understand?